All right, everybody, it is still February the 7th, and we are minutes after the closing bell. Fed Chair Powell comes out, market volatility went crazy, bonds still went up. What does it really mean for the market, and what did Fed Chair Powell actually say? Let's talk about it. I'm your wealth guy. Let's talk money. Let's talk market wrap-up. All right, everybody. So welcome back to the channel. Thank you very much for tuning in. I really hope you like what you have to say today. And if you do, and if you really don't, feel free to comment down below. I'd love to hear what you have to say about what Fed Chair Powell had to comment. And in addition, where you think the markets are going to be going over the next quarter. But let's have a look first at the market, because today the markets whipped around. We were down into the negatives, 200 points in pre-market, whipped up 250, down 250, back up. Markets finished in the green today with the US 30 currently up, the Dow Jones currently up 265 points at the closing. We have the S&P 500 up 53, just shy of, and NASDAQ up 226. Even here in Toronto, the TSX finished at 96 points in the green. Now, let's have a look at our confirming indicators. So crude actually finished up quite significantly, 4.33%. Very, very aggressive move by crude. The 10-year yield also continued to march upwards, although a little bit more stable today than it was yesterday, up 1.5% on the day. Looking at our commodities, gold finished up $3.55, silver down 6.5 cents. However, again, energy continued to move to the upside pretty well right across the board. We're seeing a lot of positives there in commodities. And just to cover cryptocurrencies here, over the last 24 hours, still the top 10 looking strong as far as being positive over the last 24 hours. But let's dive in to what Fed Chair Powell had to say today. So essentially, and I'm going to take this quote directly from investing.com. This is Fed Chair Powell speaking. We didn't expect the January jobs report to be this strong, but it shows why we think that this will be a process to bring down inflation that takes a significant period of time because the labor markets are extraordinarily strong. Now, what does that mean? Well, let's flash back a little while here, back to 2022, where Fed Chair Powell did come out and say that jobs are going to be lost as they continue to battle this inflationary issue. Now, as rates continue to move up, we know for a fact, and I don't really care what the numbers had to say last week, because I think myself and a lot of other people here, not just on the platform, and a lot of other analysts significantly smarter than I am, are actually talking about the possibility that these numbers aren't as accurate as everybody wants to have us believe. Now, especially when we realize the tech sector has significant layoffs, as well as a number of other industries as well. To see a jobs number jump up that much above expectation is actually surprising and hard to believe. But keep in mind, this does two key things. Number one, it indicates to the Fed that they can still continue to raise rates. Now, I know a lot of people were anticipating that we're going to have at least 2 more rate increases because they do want to get to that 5.1 average rate. I think there's that possibility that we may see an additional one after that as well. I wouldn't put it outside the realm of possibilities, keeping in mind that the jobs or the labor market looks strong. Now, if that changes, certainly there might be a shift there at that point. But if we go further down into the same article, which is another quote, the Fed is trying to achieve a single policy that is sufficiently restrictive to bring down inflation to 2% over time, and we don't think we've achieved that yet. So what does that mean to me? Well, that tells me that, again, Fed Chair Powell and the Fed are not done raising rates yet. So keep that in mind as we move forward into the markets. Now, with today's positive momentum, a lot of people saw this as being a little bit more dovish rather than hawkish, and I agree to an extent. I think a lot of this is already priced in. We know that 5.1% is the target. So I think a lot of this is already priced into the market, into the negative sentiment. But to see the markets move this aggressively in both directions before finishing up 226, is an important thing to note here. I think the positive momentum should probably continue throughout the quarter. That's a personal belief here. I wouldn't be surprised, however, after that quarter, we start to see a little bit of instability. The main thing here is that 10-year yield. As long as we see continued stability there, then we know that the markets will probably continue to hold on quite well. Now, does that mean we're going to have just a straight ride up? Not likely, but I don't think the Fed is done yet. I think they want to still continue buying everything behind the scenes here. And I do expect that the markets will continue to follow suit, not to mention additional money printing via conflict overseas in Europe. I think all of that is also going to play into the market momentum to the upside. Now, keep in mind, I am watching gold very closely as well. I do expect the precious metals to continue to go back to their upside trend. Silver will be a laggard here. I do anticipate gold to lead the way for the short term, eventually silver to follow suit. And although that's the traditional way that silver has always followed, I think we might see something a little bit different down the road, probably Q3, where silver will start to accelerate. I don't think we're out of the woods yet as far as recession and a weakening economy is concerned. We'll continue to see some negative numbers. I do anticipate that. But for now, we'll take what we have. Markets will continue to move to the upside, at least for the short term. That's where I think Q1 will be. But I'd love to hear your thoughts. Feel free, comment down below. And keep in mind, every morning we are doing our shorts pre-market just to talk about market conditions before the opening bell. So I'll see you at the opening bell.